Let's welcome in our next guest. We have with us Rajesh Baheti, MD at Crosseas Capital Services. He's joining us now to talk to us about the markets. Rajesh, thanks so much for being with us at NDTV Profit. Now, last week we've seen a strong rally coming in for the indices. It may be short covering, but foreign buying is still missing. What would you make of this kind of move? Do you think this rally is believable, even though foreign buying has not been there?
Well, a couple of things that come out of this rally that we've seen in the last month and a half is that it's led domestically, and which tells us that some of the deposits, I think, that went into the banking system due to the demonetization has become quite sticky. And in fact, the mutual funds have been the major beneficiaries of that fund flow into the banking system. So I think a lot of money must have poured into equities out of the banking deposits that we saw in the month of November and December, and the mutual funds seem to be flush with funds to invest. So in a way, it's a good development for our markets that despite consistent FIIs selling, though not too much right now, but it's still consistent selling by the FIIs, the market is actually rallied for 500 points. I don't think I quite remember the last time such a thing happened. So I think it bodes well for the future for our markets that we do have a counterbalance in the domestic sector now, as opposed to markets that was determined only because of the FII flows.
Do you think this rally is good for more? What would be your top picks?
Pardon, I didn't hear you.
Do you think the rally has more legs? Is it good for more? Do you think the Nifty is headed higher? At this point of time, what would be your top picks?
I think technically we are poised at a very interesting time. I think, the markets love what they call a golden crossover. I think we're at a cusp of that on the 50, 100 and 200 day moving averages. So, technically I think the market looks very, very strong right now. But we have a couple of big events. One is the Trump administration taking charge in the US, and sure enough, I think in the first month or two, they will be out with their first set of policies, whether they are like more domestic driven and anti-globalization. We'll have to look at that and what it does to the rest of the world around us, as well as the budget. The budget has become one of the key documents this year, as opposed to, every year where the importance of the budget has gone down. So in the budget, we don't expect too much out of the indirect tax front, because there is a move to GST that may happen in July or may happen in September. So I don't think the government will want to fiddle around with excise duties or service taxation. So the big focus of this budget will be what will the government do on the direct tax front in terms of cleaning up the entire complication that exists in our system to encourage people to come into the tax bracket. I think the markets are looking at these two key events in the future, but technically the market is seeming to be very, very strong right now.
So can you name some picks? What would you look to buy or invest in at this point of time?
I'm sorry, the audio is not very clear, but I'll try and give a reply. The way to play this market, I would think, would be, February calls are still very, very cheap. So if I think the market is strong as it is now, and it's likely to continue to be strong, despite the events that I underlined, the best way to play this market would be to, go long call spread. So maybe a buy 86 February, sell 88, or buy 85, sell 88 or 87, or even buy 87 and sell 89. So go for a 200 to 300 point spread on the February Nifty calls. That would be my advice right now.
And in stocks, any particular stocks that you like, that you think would be safe bets if the optimism that you think could play out, especially with the budget on the anvil? Any stocks that you're focusing on?
Well, I don't kind of focus on stocks. I look at the broad market, but clearly we've seen in the last few days that the bank nifty is increasingly looking stronger. So once again, I think the banking space could be in focus if the nifty were to break out over 8,500 and make a move towards 89,900 levels. So I think if the nifty were to break out, then you would be better off buying the banking sector and the BFSI space by way of either buying the call spreads or doing the bank nifty trade.
Right. In terms of metals and the strength that we have seen over there, Rajesh, do you expect that metals will continue to do well?
Couple of things here, metal prices have increased over the past year, but some of the anti-dumping duties that the Indian government levied on the metal space are still in place. So I think there is a case now that some of these duties need to be rolled back, and if that were to happen in the budget, rolling back of some of the duties, I think the domestic metal sector could come back under some pressure. So we've seen a 300 to 400% rallies from the bottoms in some of these metal stocks. I would be very, very careful right now. The global recession and the global anemic growth is not out of the way. There is some investment activity happening in China, but that's clearly not enough to sustain a rise in global commodity prices through the year. And I think our level of protection that is way too high currently needs to come down, and if it does come down in the budget, I think the domestic sector might be back under some pressure.
Right. In terms of banking sector, especially after the results of Indus and DCB, do you believe that banking sector can continue to outperform going into the result season?
Well, I think technically yes, because the Nifty is poised at a very interesting crossover point, and I think if it takes out 8,500 maybe post-budget or whatever the events that play from there on and goes towards the 9,000 mark, which is a very, very distinct possibility. So it looks far away right now, but once the Nifty crosses some kind of a threshold, I think there will be a bull run, so to say, which will panic bull run, which will take the market towards that 9,000 levels. And that were to happen, I think the BFSI sector would outperform.
Last time around when we spoke about the BFSI sector and the rally, you mentioned about the PSU banking space. This time around also the contra view, PSU banking would do better?
Not really. I think all of the BFSI spaces, I don't see any outperformers apart from, outlier here or there. But PSUs, again, you've got to be very, very careful in terms of what stocks you pick. I think the majority of the PSU banks are sick. They're virtually with no net worth. They'll keep on going because the government will do something about it. There are a couple of interesting plays where some kind of restructuring, some kind of reform is taking place. I would look at those PSU banks and they would continue to perform with the private sector peers. I think the rest of the PSU banks where no real reform is taking place, I would use any rally to exit out of those positions.
Right. In terms of NBFCs, do you think they will also rally when you mean the entire BFSI space?
I think the NBFC space will be challenged a bit because the banking system is really coming hard at them with the kind of fund flow that they've seen. I think you've seen the reduction in rates, especially on the consumer loan front. The housing finance business, the banks are going hammer and tongs at that business. They've really broken the rates, I think. So some of the BFSI space, the larger ones might do okay because they will have access to low cost funds. But some of the smaller companies I would stay out of because I think they will be challenged in terms of their NIMs now.
Right, and also results are a big unforeseen event for some of these MFIs and or rural-based NBFCs, and that could act as a derating event as well.
Yeah, I would stay out of the MFI space for the simple reason, the demonetization effect in terms of what it does to the NPA numbers are still unknown. So I think it's a dangerous place to be in. I would just wait for the numbers to come in before doing anything in that sector. So MFI, in terms of the rural focused NBFC space, is a clear no for me right now, until we see some more clarity on the real effects of demonetization from the unorganized sector coming in.
In terms of IT stocks, would you take a contra bet on the positive side? Results are behind, so at least in the next 2 to 3 months, there's no major event lined up as well?
I continue to hold the view that India is not a market where you find value in stocks unless there's a sharp turnaround, that you get to see in the commodity space. So commodity stocks, whenever they are overbeaten down and commodity prices take a turn globally, I think those stocks make beta of 3 and 4 and give you handsome returns. But these are mature stocks. These are stocks that don't go up or down based on international prices. I think the value pick market in India, the pharma space and the IT space will continue to be challenged. There's very little upside. I think visibility is poor. You don't know what the policies of the new administration in the US will be. So, and there's so much disruption happening even in this space, that how much of outsourcing will get replaced with, robots and automation. So everything is an uncertainty right now. And none of these stocks can be played on dividend yield because of the way the taxation structure is structured in this country. So I would clearly be very, very careful in trying to, pick bottoms in the IT as well as pharma space. Now, they may not go down, but that's not one of the reasons why you buy equity.
When you talk about dividend yields, you think that in the next 3 months, PSU companies will be in focus, especially the ones that have huge cash on their books?
Yeah, unfortunately, we have almost 30% tax on dividend in the Indian markets, and that also after the PSU or whichever companies that declare dividends have paid their tax. I think we need to look at the integrated system of taxation where if a company is enjoying some tax credit or tax benefit and is not taxed to the fullest extent possible, to that extent you could tax dividend to make it, equalize up to 30-35% or whatever number you want to tax this entire flow at. But to tax at 35% and then again at 30%, I think is criminal. And which is one of the reasons I don't think dividend yield investing in India will take off till these laws are changed.
Right. Then, let's talk about some contra names. And earlier, you had mentioned about the PSU banking space, how you would be a contra buyer. Metals also you have adhered to as contra buying. Can you just tell us any contra sectors that you're picking up? Anything on real estate, anything on telecom, anything looking interesting?
Well, the way I look at it, the market is poised for a technical bull run. And when the market is really in a bull run, then you would continue to hold on to the sectors that are performing. So I think the market as a whole might seem that it would be better off rather than looking for contra names, rather than looking for bargain buys. Right now, if the market really does well, the time is to just ride this bull run that may happen to 9,000 or even beyond, if that were to happen. And the best way to play that is to look for call spreads which are available really cheap right now, and that's the way I would play the market rather than try and pick contra names. And really the only two beaten down sectors is the pharma and IT space, and I'm not quite bullish on them yet.
Right, and as far as the calls are concerned, you mentioned about the Feb calls, but overall even long dated calls can be bought?
Yeah, absolutely. You could look at the December 2017, 9,000 calls and maybe a 9,000, 10,000 call spread. They are not so liquid, but if somebody were to, slowly build up their position, I think the market will give them that call spread. So 9,000, 10,000 call spread on the December 2017 call also makes sense right now.
Right, and just a word on 2017. Again, you believe it will be a year of two halves, where the first half you may see a selling pressure or some returns, and then in the second half, it could be opposite.
It's a very, very difficult call to make. There are too many events along the way. We have a huge change in the way the US does business with the rest of the world in the offing. How that plays out, none of us know. But of course, the risks are going to be heightened. So I think the IVs and the volatility in 2017 will be a little higher than what we've seen in the recent past, which is the reason I think the entire volatility space will be a space full of opportunity to trade, because you're going to see some key events unfold and the markets do a lot of gyrations in 2017. That would be my key takeaway.
Mr. Baheti, thank you so much for taking out time for us. Always good to get in a perspective.